I'll make this a super short and important video if you want to make money this week and leading up into April. No masterclasses, no boot camps, nothing like that, no webinars. I just get right into the point. I respect your time, so I'm going to give you all of my research. Let's start with the first stock, SoFi. As you can see on the chart, SoFi is at $12 per share right now, and SoFi is recovering. Under $12 per share, the stock is just way too cheap, and it's easily going to hold the $12 level. Investors know that it's too cheap. Literally, it makes no sense other than the fear going on in the market, which I'm going to cover in just a couple of minutes in this video after SoFi. Look, if you ask me, I think SoFi is easily a double or a triple. SoFi was trading for over $16 per share, and this sell-off has really taken the stock down more than it deserves. This is definitely an overreaction for SoFi stock. Now check this out, the market cap is currently sitting at $13 billion. This can easily be a $30 billion company. If you look at the facts, the company added 2.8 million new members in 2024, but it added 4.1 million products. That means there's a big multiplier effect. And what's going on with SoFi is they're getting customers in the door. They're providing their products up front that are really cheap to attract a whole lot of people, and then they're upselling and cross-selling on the back end. Their business model is absolutely genius. They're achieving a multiplier effect by getting in back-end sales. With the plunge in the stock price, SoFi stock is trading at very attractive levels right now. Its forward PE ratio is under 30, sitting at around 26.5, while its price to book ratio is at 2.1. That's more expensive than the typical bank stock, but SoFi isn't a bank stock, guys. It's growing much faster than a standard bank, and the technology that it uses to make its platform a better alternative gives it a tremendous opportunity because, again, of that back-end sales model. By combining technology, payments, and banking businesses into one agile model, SoFi is challenging the standard banking structure, and this innovation is really disrupting the market. Now check this out, Anthony Noto is the CEO. I'm talking about the CEO because it's a very important component if you're looking to hold SoFi or just stay invested, you're looking for confidence. Anthony Noto is the man that's leading this company to a lot of success. He has 7 years of SoFi. He previously worked at Twitter, Goldman Sachs partner and co-head of global TMT investment banking. He worked at the National Football League, and this guy has a Wharton MBA. Also, not to mention, Anthony Noto is team bicep over tricep. He also works out, and that's really important because a CEO that stays active also has better performance, and that is a proven fact. Anthony Noto envisions SoFi as a full-scale financial ecosystem aiming to become a one-stop shop for all banking, investing, and lending needs. He's aggressively scaling the company. And again, the tech-driven approach that he's using for AI and digital banking is an absolute traditional bank buster. He's innovating and he's going to bust all the old banks that are using old technology, have the old business model, because look, SoFi, they're going to have more profitability, more user growth, and with their vertical integration, I think that Noto's focus is absolutely perfect. So SoFi is set to not only benefit from its business model, but also falling interest rates, which I'm going to talk about in just a moment, for handling this market and what's going on with S&P 500 and the overall market. But look, I'll cut it short here on SoFi. I don't want to talk about it too much. Basically, I would keep holding it. Let's talk about the general market. I am buying SPY. I'm literally buying SPY hand over fist, bicep over tricep. I've been hitting the gym, and that's because, right now it's really important to be patient in the market. It's important to understand that this sell-off, it's a short-term thing. We're going to get all-time highs in 2025. I'm telling you, the tariff issue will be resolved in the next 2 to 3 weeks. And look, the markets have rallied post-election until mid-February, and then it all reversed, right? Well, what changed? What happened? Why are investors panicking so much? And I think this decline is just really a mirror image of the previous rally. We have some high valuations, some high beta stocks, and when the market drops, you see a whole bunch of people, looking for the exit door. And that creates panic, and then the market sells off and overreacts. Investors are pricing in an uncertainty risk premium. And for about a month now, it's been risk off mode. And a lot of investors have been very cautious because they want to protect the gains that they've had, especially long-term investors, and short-term investors have been in a really tough spot. But look, let me just point out some facts and let me give you some perspective here on what's likely to happen in the market and why the best strategy is to dollar cost average and buy companies, and to really be patient and not to, overreact here. So look, dollar cost averaging is the proven strategy. A lot of these companies right now are becoming a lot cheaper, especially some of the Mag 7 companies. And I think there's just a whole lot of opportunity here. Now, on the flip side, everyone is expecting multiple rate cuts in 2025. And the Fed does look like, they're either playing games or they're a little confused themselves, because we see a lot of data that's coming in from the consumer in terms of their purchasing power, and it's a little bit weak. And the Fed is saying, hey, we don't know if we need to cut rates right now because there is a lot of uncertainty in the market. And you can even see that because Costco, the wealthy consumers, are actually downgrading to cheaper meats. So, I was saying a lot in my videos that there's something called a substitute good, beef and chicken. They're substitute goods in a CPI basket. And Costco, is saying that, even rich people are starting to buy less of the, more expensive meats. And Dollar General is thriving right now. So we do see a weaker consumer, and that is an issue in the economy. However, that's not really going to stop the Mag 7 or the AI revolution from growing. So although there are some signs of weakness, history says that markets recover, and that's why I'm buying right now. And Tom Lee also confirmed this. So check out the 60-second clip, and then we'll talk about Palantir after this.
But history says that markets will recover, right?
Yes, they've recovered every time. One thing we have to keep in mind is when markets fall this quickly from a 52-week high. I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think two other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the U.S. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
All right, I want to talk about Palantir. We're going to pull up the chart. We're going to go over the technical analysis. And I made some big trades on Palantir in Discord, and I can't mention them here because I'm focusing more on plays on the Discord community only. And I'm just going to keep YouTube very simple. I'm making less content, but I'm trying to keep you guys updated here. But look, I still want to break down my general overview of Palantir. And I think that the company is expertly leveraging AI to enhance the operations of clients as diverse as the US government, Ferrari, and so many others. They have a lot of big contracts both on the government side and the commercial side as well. Its client growth has been absolutely explosive, reflecting the immense value and broad applications of its technology. Its sales have also followed suit. It's very clear that Palantir is delivering substantial value, growing its business rapidly and managing costs. And I'm looking at my notes here, and the company's valuation is actually becoming a lot more reasonable. Since the company has pulled under $100 per share, I do think now the stock is reasonably valued. However, I will say by no means Palantir's valuation isn't cheap, but it's reasonable for the growth that they are experiencing. Its PE ratio is multiple times higher than Nvidia. It's over 5 times higher in the PE ratio. So does Palantir deserve to be there? Well, if its growth rate continues at 20 or 30% on the top end, and they continue to bring down top revenue down to the bottom line, they have high profit margins, then yes, this company is a very good value. It's hard for me to say buy Palantir hand over fist, bicep over tricep right now. I have been a lot more cautious, and again, in my Discord community, I have completely hedged Palantir for the short term because the risk and the beta in the stock is concerning to the overall portfolio volatility. So if you do want to check out my trades, I won't be posting them on YouTube anymore. I won't be talking about specific trades. I'm just going to keep it to general knowledge and updating you guys on the stocks. But if you want option trades and everything I buy and sell, that's always the first link in the description. I'll wrap up the technicals on Palantir and then we're going to go into Nvidia. Palantir right here, you can see that it did go under $80 per share. Now it's at 86. And, I think in the short term, we're not going to get too much upside on Palantir. I think we're going to probably go sideways until the next earnings because Palantir, it doesn't have as much news coming out as something like a Tesla where we have Elon Musk always coming out with some type of updates. Palantir is really just that high growth company that's, not talking too much. They're doing more and they're saying less, which I think is very awesome about Palantir. Now, let's move over into Nvidia. Nvidia stock has a very big recovery. And like I said, it's time to buy the market. It's an opportunity because you see here, Nvidia really went down to $107, but we got a really big bounce. And I think that, look, if you look at the Nvidia technicals, it kind of speaks for itself. But Nvidia is also obviously the infrastructure to AI. It's the infrastructure. So this company only has one way. And Jensen Huang is actually going to be speaking at the Nvidia GTC conference. This is going to happen on March 17 to the 21st in San Jose, California, and virtually as well. So you guys can, check this out if you're interested in learning more about technology and the keynote speech that Nvidia CEO Jensen Huang is going to have. So I think that there's going to be some announcements that are probably going to drive the stock higher because he's going to be talking about innovation. He's going to be talking about AI, robotics, accelerated computing, and much more. So I'm pretty excited. We're also going to get some information here on maybe some quantum computing, some general robotics, and I think this is going to be a very interesting conference that I am definitely going to be attending. And look, when it comes to Nvidia, let's go back to the technicals. I think this can easily be a $130 stock in the short term. And over the next, 6 to 12 months or leading up into the end of 2025, this stock can be at all-time highs again. I mean, this stock can be at $150 per share at the end of this year. So don't discount that just because of uncertainty and volatility, that some of these high growth stocks are no longer high growth. Now, I also want to talk about Tesla. Tesla has had some really bad performance. And in Discord, I did get out at $287.50 or about $290 when you factor in the premium. So I've had some savings on Tesla, but overall, of course, I do wish that I would have sold it in the high 400s. I'm not a genie, I couldn't tell, and I can't predict the market. However, I will say on a long-term basis, predicting the market is pretty easy, and I think that Tesla is going to be up. Despite being 36% cheaper than in January, Tesla has never been stronger fundamentally on the business side of things. So the market pessimism really doesn't have much to do with Tesla's overall business. Yes, I mean, there is some concerns about, political actions of Elon Musk, but overall, if you look at the fact, full self-driving is 95% complete. Autonomous driving software has the highest mileage data. And, right now we're in a data economy. Data and numbers is what drives businesses and profits right now. Looking at the humanoid robot, that's going to be out at some point. And it's, when it comes out, it's going to be like $10 trillion of valuation over time. So, the sooner we get to that, the more that will be baked into the stock price. And I think Tesla is just like the overall market. The current stock dropped due to macro-driven fear and not necessarily fundamentals. Tesla's cash reserves, revenue, and technology are very strong, especially their cash reserves. And look, volatility is not risk, guys. A lot of people get confused that, okay, volatility means high risk. Well, not really. And we also see, someone like Ron Barron. I studied him a lot this past couple of days. Spent a lot of time just reading his work and understanding his perspective. I spent hours, and basically here's his summary of what he said. He says that stocks are extremely cheap right now, and he emphasizes that the current market uncertainty is creating opportunities for long-term investors, which is what we are. We're not traders, we're long-term investors here on this channel. So he remains bullish on Tesla, and he expects massive gains over the next decade. Now, I know you want some short-term gains, and I do too, we all do, but look, on the long-term basis, Tesla's cheap. All the stocks I'm covering are cheap, but when's the right time to buy? Well, I would just be dollar cost averaging. Don't put all your dry powder to work in one day, but be buying over a consistent period of time. Ron Barron invested $400 million into Tesla in 2014 to 2016, and that grew to $67 billion. Okay, with the B, I almost got confused there. 400 million to 67 billion is what I have in my notes, and that's wild. That means that Tesla has had huge growth, and I honestly think that the stock can still, double, triple, quadruple in the next 5 years, next not even 10 years, to be honest. As soon as they have more announcements and innovation coming out, hitting the market with FSD, I think we're going to see the stock go up to $400 per share. Now, will that be in the 2025? I don't know. Maybe mid 2026. We'll see, right? We'll see. I'm not going to try to predict day to day what's happening. That's silly. I'm not a trader. I'm an investor, and I have a long-term perspective. So look, when I look at the technical analysis, stock's just under 250. I think this is a good opportunity to put some risk on the table again, and buy some leap options. Do some covered calls and sell some puts. The typical option strategies that I talk about. But again, I won't be talking about that on YouTube. I'm going to be focused on Discord. I am making less videos, so I apologize about that. I do want to focus more on my students at the moment, but I'll be making as much content as possible. So if you want to subscribe, I will keep updating you on all these stocks that I am following, but I am following many more: Walmart, Apple, Nike, and I have Meta in the portfolio, XLF. I'm looking at some gaming companies like Take-Two Interactive, Chipotle. I have a whole lot more stocks that are in the tech space, in banking, and I think that there's a lot of opportunities right now. So I'll keep you guys as updated as I can if you're subscribed, and I'll see you in the next one.